right, fantastic. So many familiar faces in the audience. Great to see everybody. I love the 10 a.m. slot. I think there's nothing better than a 10 a.m. slot in the morning. It's not too late, not too early.
It depends on what you're trying to do, Yousef.
Fair enough. All right, so we have a fairly serious topic today, which is navigating the New World Order. And so as part of my preparation, I went out, did some research, academic journals. You know, what do people look at when they talk about a New World Order? Because you hear it on a regular basis. And there's actually a lot more out there than any of you would want to know by any stretch of the imagination. But what we're going to try and do is unpack a lot of that in about half an hour. So, you know, no bold targets at all. When I think of some of the challenges ahead, I really struggle to get a better sense of the current backdrop to global monetary policy. The Federal Reserve has raised interest rates to the highest level in 16 years, and it's sending shockwaves around the world. Just give us a bit of a sense of how that's kind of showing up at DBS, given the bank of your kind of size, which is one of Asia's largest.
So, Yousef, actually, let me address a different question. I'm going to come back to that. And it is this, that when I think about the New World Order, if I had to focus on 2 or 3 big things that we might want to use the half hour talking about, one is geopolitics. I think is going to be defining relative to the last few decades. The second is obviously technology. I think technology is a game changer. Arif just talked about some of those issues. And I think the third is sustainability, like it or not, the change. And so you notice that monetary policy and what the Fed is doing in the wake of SVB or, you know, inflation, I really don't see as part of a new world order, per se. I think monetary policy has been cyclical for, you know, a long period of time. And those of you who are in the audience, as old as I am, I've been used to 15, 16, 18% interest rates in the 1980s, Paul Walker time. And for most seasoned people, I think Jenny Johnson mentioned yesterday, most of our careers, 4, 5, 6% interest rate environment is really not been unusual. So the big difference this time around has been not the level of rates, it's the pace of change. Normally, the Fed tends to take a couple of years, 2.5 years, to slowly work its way up. This time, a lot of people have argued that the Fed was behind the curve, and as a consequence, they had to react much more quickly. And so the real issue has been this, that, you know, they got from 0 to 5.25% in like 14, 15 months, and that's what's unexpected. So I don't think a lot of market participants were thoughtful or ready for the speed of change.
All right, so let me follow up on that just in terms of whether you expect the Fed to hold this year, or like the bond market is currently signaling that they're going to have to swiftly cut rates again. What's your thinking at the moment?
Well, you know, you're not hearing anything new because yesterday both Jenny and Bill Winters said what I'm going to say, that I think as practitioners, we think the markets are anticipating cuts far more quickly than most bankers are. I don't see the Fed cutting rates this year. I do think they will start cutting rates in 24. And so what would be the conditions under which they'd be forced to cut rates? The market would be right. It would be, not to your earlier question, that the financial catastrophe and the crisis is much deeper than we are expecting. And that would cause the Fed to rethink. I personally don't think that's the case. If you look at some of the challenges, SVB, Signature Bank, and First Republic, they tend to be idiosyncratic. It is true that a lot of banks put on duration in the low interest rate environment. And some of the durations, tend to be longer than usual. I think it's also true that the nature of bank runs has changed. So the fact that you can move $40 billion out of a bank in one afternoon is not something I've experienced. You know, in the old days, it took time for people to get spooked. These days, Peter Thiel sends an email in the morning and it's viral in half an hour. And in the old days, if you had to take physical money out of a bank, you took, you know, cartons. How much could you take out? Today, with the press of a button, you take 4. So that has changed.
Yeah.
But even then, I think it's idiosyncratic. I don't think there's massive spillover. We're not seeing any liquidity problems in our region. You asked about DBS. We've actually been beneficiaries. Money has been coming into DBS, not leaving DBS.
That's something I want to pick up on just in terms of the impact of the collapse of SVB. I think we can all agree that SVB had a very special space in the tech ecosystem, which is part of what this conference is all about. Are you seeing a rotation away from some of these other parts of the world into DBS? I mean, is there an opportunity window that's come up as a result of the collapse of SVB? Would you say it's a net negative?
Well, the short answer is yes. I think historically there's always a flight to quality whenever you have crises. And just anecdotally, in our private wealth business, in a typical year we'd get $5–6 billion of new money. Last year we got $25 billion. Now, some of that is weakness in banks around the world. Some of that is other, uncertainty. So yes, we've been beneficiaries. So have a lot of banks which are, seen to be strong, and regions which are seem to be or divorced from the epicenter of the activity. Yes.
You mentioned earlier the rivalry between the U.S. and China as being one of the defining components of a new global order. I wouldn't call it rivalry. People keep saying rivalry. It's not a rivalry. It's not tensions. It's much more serious than that. And one piece that stood out to me was from Ray Dalio, who basically says that we've passed all frontiers in terms of being able to resolve this diplomatically, and there is a serious risk of escalation, potentially war. In the past, you've been still quite optimistic that the two can sort things out. Do things have to get worse, Piyush, before they can get better?
It's a difficult question. My view on this has been that unlike the Cold War, where the Russian bloc was relatively small and you could sort of, bifurcate it, China is too big and too integrated into global systems and global trade to actually bifurcate it easily. China is the largest trading partner for 68 countries in the world. That's really hard to unravel. And China continues to increase its trading partnership with many countries, even through the last 12, 18, 24 months, including in the Middle East and Africa and the South-South economies. And therefore, I think it will be very hard to create a true bifurcated system. Even in recent times, when people are talking about friend-shoring, near-shoring, alternative China plus one, there is an element of that, but I'm not seeing anybody actually shift supply chains or supply lines out of China, assembly lines out of China. The next marginal investment might be going outside China. A lot of that also tends to be in Asia because that's where many of the markets are. If you want to service the China market, the Southeast Asian market, you actually wind up investing in Thailand, Malaysia, Indonesia, etc., etc. So my base case is still that it's going to be very hard to create a complete bifurcation. There's some sectors, semiconductors an obvious one, but other parts of the TMT supply chain where there will be tensions, and that will create, increase the cost of doing business. So you're going to have to be careful to not, get caught in the crossfires. And you've got to be careful at some stage, maybe to have two parallel systems, and that's not efficient. So they'll create some inefficiency in the process. But I really don't see a bifurcation happening.
I mean, that's the rational way of looking at it. You're assuming that all stakeholders are going to act in, their relative best interest.
So why I call it a new...
But what if they don't do things logically?
So, if they don't do things logically, it's hard to call, which I say that there could be a new world order shaping up from... I don't think it'll be a bipolar world. If you get there, I think you will see a multipolar world. I think, unlike the past, you will see a different form of non-aligned movement relative to the non-aligned movement of the 50s. And you will see major players, Brazil, Saudi, this region, India, all trying to service their own practical agenda. Now, if you look at the best parallel, you've got to think of Europe between 1800 and 1900. Right? There were multiple power blocks. There were no fixed this thing. And everybody sided. You try to read European history. It's impossible to remember who sided with whom and against whom in which 10-year period. They kept sort of changing sides. So my worry is that you're going to get a new world order where it's not a bipolar, bifurcated world, but a multipolar world with everybody serving their own interests and creating pragmatic relationships from time to time. Now, that still requires you to think very differently. And I think all companies and all countries are going to have to put on this agile and nimble way of thinking over the next several decades, and that's not straightforward.
So when we think about this new world order, and maybe maybe more on the financial side, where does Dubai fit into sort of the global ranking of hubs? It's been up and coming for a while. I would venture to say that it's now firmly established as a key hub globally. What's your read on that, and what would you like to do more of here in Dubai?
I think Dubai is, I find there's a lot of similarities between Dubai and where we're headquartered, which is Singapore. Singapore tends to anchor itself loosely of the ASEAN hinterland. It's not a tight coupling like Hong Kong, China. It is a loose coupling, but Singapore is the center of a lot of activity, frankly, going into the Indian subcontinent from the East Coast. Dubai has the same role. Dubai actually plays a very similar role for what is another large and thriving part of the world, and including the integration into the subcontinent, but also into Africa. I think you're going to find in the multipolar world that hubs like Dubai have a particularly important role to play, therefore, as being a neutral player, being able to intermediate flows from the West and the East. I think that's a real opportunity. If you go back to Singapore's foundation as a financial center in the late 1970s, late 1960s, early 70s, it came from the establishment of the euro-dollar market in Asia. And with the realization that there was no big center between Tokyo on the one side and Zurich on the other. So Singapore tried to create that position. Then Dubai has the same opportunity. Also, the big re-emergence of the Middle East, partly because of energy and partly because of modified strategies, a greater degree of geopolitical clarity in the region, Saudi Arabia's own emergence. I think there are very significant tailwinds that Dubai can benefit from.
I mean, you put quite a few advantages out there, so I'm going to see whether you're actually putting some capital to your claim. Is DBS expanding in Dubai or in the Middle East? What kind of resources are we talking about? What's going to get deployed? Or is this still a decision that's yet to be made?
It's a decision which is in the process of being reviewed. So 10 years ago, I've been in the company for 15 odd years, we had this thesis that there would be a lot of Middle Eastern flows coming to Asia, and it actually didn't work out. So between 2008 and 2012-14, there was marginal interest. We saw some of the telcos come in, we saw some limited property deals, but not of scale. And so we basically shifted away from those aspirations. Today, I think those aspirations are being rekindled. I think the connectivity between the Middle East and Asia is resurfacing. And therefore, even as we speak, we are revisiting the thesis that there's a real opportunity to do more stuff out of Dubai and in this region. We have a presence in DIFC, which is why we're here. It's been limited, but I do think there's an opportunity to scale that up.
I want to delve deeper into digital technology and finance, and specifically what the top priority is at DBS at the moment. It evolves rapidly. I mean, even if you try and keep up to speed on a daily basis, it almost seems like you're never quite able to. So where are we today, Piyush?
Well, I think post-COVID, I think it's fair to say that for most companies, pure digitization is table stakes. Now, everybody got used to the idea that consumers will consume digitally and you can run your production processes digitally. You can work from home, loosely speaking. But if I had to choose three areas where I think the needle is moving very materially, the first is obviously AI and now natural language processing, if you will. Again, I spoke about it. I think AI has been massively powerful in multiple sectors, including in our industry. At DBS, we employ about 1,000 data scientists and engineers. We run about 600 AI models across everything from hiring to our people movement to compliance, marketing, underwriting, credit. And we just scratched the surface. I think the opportunity for AI is massive. And now, as everybody knows, with ChatGPT, natural language processing, large language models, I think it's going to be a complete game changer. I'm aligned with Goldman Sachs, who suggested that you could lose 30–40% of jobs in the back of this. For the first time, I'm not being able to create alternative reskilled jobs as fast as we can take the jobs out. So I think that's going to be really important. The second big area continues to be distributed ledger and blockchain technologies. Despite the crypto winter of the last year or two, I think people are taking the wrong message away. And it's, frankly, even the crypto assets I don't think are dead. But certainly the underlying technology is still very powerful. It can change the back office of the world. The world moves from a hub and spoke arrangement to a point-to-point arrangement. And if you look forward, you start wondering, do you need stock exchanges? Do you need banks? Do you need registrars of societies? Do you need any hub? Because if you can do everything point to point. So I'm of the view that you will still see a lot of leverage from that. I also think tokenized assets and tokenized value has the real opportunity. And the third is metaverse. I've personally not been able to get the right use cases around metaverse, but I'm guided by a simple phenomena.
Can we get back to the metaverse?
Yes,
so we
sure.
can flesh that out separately. And before we get to that, though, we had a digital banking outage at DBS on May 5. It was the third one in 18 months. And I have to say, when I saw the headline on the Bloomberg terminal, I was like, whoa, what? DBS with an outage? How is that possible? Obviously, the Monetary Authority of Singapore got involved. Can you tell us why this is happening and what your understanding is of what the issue is in the infrastructure? Because the ambitions, are there for everybody to see, but clearly the infrastructure is not keeping up.
Actually, it's not true. So we had 3 outages. The first 2 happened to be around a particular piece of software. So, today in modern technology, if you use cloud native, which everybody does, all the big tech companies, you stitch together a lot of microservices and use API architecture to stitch together services. And you procure some of these services from third parties. So we have an authentication service, which we procure from one of the biggest authentication players in the world out of the US. There's a glitch in the authentication server. It's complex, but the replication process had a problem. 16 months later, as part of repairing that, we moved and upgraded to the latest version. The latest version turned out to have bugs in it. It was buggy. So that created a repeat problem in that service. But it's a one-time service, which is this thing. The most recent thing was just coincidental. The mainframe hung for 30 minutes. By the way, this happens in every company and this thing in the world. Your phone hangs, the mainframe hangs. So it's just because it happened so quickly after that particular hit that it got a lot of global attention on this thing. So our infrastructure is fine, it's robust. It actually allows us to do 70,000 releases a day. It's exactly what Netflix or Facebook or Google would do.
So you're not seeing the need to spend any more money to deal with this or take any corrective measures, penalties for staff? I mean, is that something you're looking at?
I think there are 2 separate issues. First of all is we always spend money on infrastructure, and we are taking the opportunity to review everything we have to say, is there a way to improve recovery capabilities? And that's something that if it means spending more money, of course we will. But the second thing you raised here, which is penalties for staff, I'm a firm believer in the fact that if you start penalizing people every time something goes wrong, you will never build the kind of culture you want to build, a culture of risk-taking, entrepreneurship, and winning. So no, my approach is not to go and penalize people every time something goes wrong.
You were talking about the metaverse a moment ago, so this is our chance to kind of explore that frontier in a bit more color and creativity. I'm still struggling with it. I mean, I have experimented with it, and I get the fanfare. I can't quite understand the use cases yet or make those links. What's the initial thinking at DBS? Where would the angle of attack come through for you?
So, I'm in your camp, but let me start with a different point. I'm struck by the fact that today 3.2 billion people play virtual games and only 2.2 billion people play real sports. And that tells me that increasingly you have a generation of people, not just the millennial Gen Zs, who are happy spending hours and hours of the day in a quote-unquote make-believe virtual world. And that insight informs me that sooner or later, you're going to have to deal and cater to these people in a very different way. So right now, our biggest focus is how do you learn enough about how the metaverse works, how NFT works, what kind of things you can do. We have a bunch of offerings now on Sandbox, which are more focused on things like CSR, getting to meet people, sort of glorifying, making 3D websites. The only use case I've really thought about so far, which needs some exponential growth, is onboarding and offboarding financial value from the real world to the metaverse. And what does that mean? In the metaverse, you need NFTs and you need tokens to be able to buy, sell, trade. You want to be able to take that out into the real world if you really want to use money to go and buy something at the city mall. So there's an onboarding, offboarding process, and I think banks could probably participate in that. But it's very early days. We've tried to participate in the gaming, the virtual gaming space. It's a completely new world with guilds and scholars and people who are, use NFTs for stuff. we've issued our own sets of NFTs. But in truth, it's all very experimental and it's all in the spirit of learning more than monetizing.
I mean, I'm getting into esports myself. I don't have a lot of time for it, but I love playing Formula One on the PlayStation 5. You know, even if it's just for 30 minutes, and you know, I can pretend to be somebody else off stage and off camera. But in the real world, you're also trying to create a demand and a supply for cryptocurrencies, and you have this DBS exchange. You were one of the early adopters in this. You tried to push the frontier. And I get a sense that you've become a little bit more cautious on this, and that's what I've been hearing from some of the colleagues who specifically spend all their day looking at this space. Would you agree with that assessment? And if that caution does exist today, why does it exist? Is it because of all the reverberations of what we've seen so far this year in global finance, or is there something else?
Actually, I think we've always been cautious. So we launched our crypto exchange as a private members exchange by invitation for accredited investors, not for retail mass market. And the reason for that is that the appropriateness and suitability agenda for retail mass market is difficult to establish. As things happen, a lot of regulators have also been sensitive to taking these products into the retail space. And so it's been aligned with our own sense of caution for what we do. But interestingly, even through last year, not in value, because obviously Bitcoin value fell, in terms of numbers of coins, our assets under custody doubled, our assets which are traded on the exchange doubled. So we're still being very active in terms of offering it. In the course of the next couple of years, we're still going to explore taking it to the retail market, but with some very tight guardrails around suitability and appropriateness. And so that's a place to be watched.
In terms of the regulatory framework, where do you see the best progress that's been made? Because yesterday and today, a lot of the discussion here at the summit has been around setting the standard for a wide variety of industries within sort of, I'm going to put it, the broader tech umbrella. You know, obviously there are different silos around that. But where do you draw inspiration from around the world, including Dubai? Because in Singapore, the standard is already high, so it's kind of sometimes difficult to look outside of Singapore for ideas.
Well, you know, I think right now, for example, HKMA in Hong Kong is actively pursuing a set of standards around the crypto space. And their approach to the retail segment is actually a lot more ambitious than Singapore or many of the other countries in the region. On the other hand, you have a lot of other regimes which have completely banned crypto. You go to India, the central bank says it's a bad thing. We will not permit any crypto at all. So I think people and regulators are at different points in the spectrum. I think the set of standards, however, while people want to look for a global set of standards, and I think some things you can draw from each other, I think for much of the new world, many of the standards are going to have to be regional standards. That's true for how you think about artificial intelligence and data, for example, right? The AI and data use, there's a lot of cultural nuance to it. What's okay in Western liberal thing might not be okay in another part of the world, and vice versa. I'll give you an anecdote. When the first COVID happened, my AI and data team, within 2 hours, created the first contact tracing, right? Saying who was in touch with who and so on. And they used Outlook data, DoTab data, etc. to do it. I was really happy, you know, my employees were really happy because we knew who could be infected. I wrote an op-ed in the Financial Times talking about this, and I got flamed because they said you should not be using employee data even if it is for their own protection. Now, that's the big difference. In Asia, this is a really good thing to do. In Western liberal thought, this is a really bad thing to do. So I think we're going to have to recognize that you're going to have to find solutions which are fit for regions at least, and cultures and contexts. And that's true for data AI. I think that will to an extent be true for some of these other areas. Sustainability is another one, where I think, you know, because the starting position is so different for different regions, people are going to have to come up with their own sense of what's appropriate taxonomy and appropriate glide paths.
We're pretty much almost at the end, so I'm going to use the closing question on some of your regional aspirations again. You talked about Dubai. When you look at the broader Middle East, where do you want DBS to be in the next 5 to 10 years?
I think the south-south corridors are really picking up, and that includes not just the Middle East, it also includes Africa into Asia. And I think Dubai is a really great location to be able to center your activities from. We already do that for wealth management. You can do that for a lot more stuff. The East African corridor, the Saudi corridor, the Middle East corridor. So to me, that's the low-hanging fruit first. How do you intermediate in the South-South trade flows and the capital flows and leverage your Dubai presence to be able to do that?
Piyush, thank you very much. It was a fantastic conversation as Piyush Gupta, and thank you for patiently listening. And yeah, we still have a jam-packed schedule for the remainder of the day. So yeah, we'll see you around. Thank you.
All right. Thanks all.